Hello and welcome to Commodity Culture, where we break down the commodity space for both new and experienced investors. Before we dive in, standard disclaimer: nothing here is investing advice. Do your own due diligence. And today's guest is part of a team that writes about energy, finance, and the economy at large on their Substack, where they have some great insights into the emerging energy crisis, central bank policy, geopolitics, and a lot more. Doomberg, welcome to the show.
Jesse, it's great to be here. Looking forward to a great discussion, and congratulations on all your success.
Thank you so much. You as well. So I like to start off with new guests by exploring their origin story. We're in a bit of a unique situation because Doomberg is a team and not one individual. So can you give us some insight into how Doomberg began and some background on the team involved?
Yeah, you bet. We are a very small team that comes from industry. We have multiple decades of commodity sector experience amongst the partners, and we used to run a bespoke consulting firm before we launched Doomberg, and as part of that consulting firm, we had a whole vertical that we focused towards helping content creators run their businesses better. And at the encouragement of one of our best clients, he insisted that we should try to build our own because of how much fun we had in the space. And so Doomberg was born 18 months ago, and I say former because we basically put the consulting business on hold and focus almost all of our efforts on building up Doomberg because it's been truly the work of our lives. As you said, we publish on Substack mostly about energy and the economy and other topics as well that interest us. It's the work of my life for sure. It's something that we love doing. By training, I'm personally a scientist with several decades leading research teams, especially in the energy sector, including a lot of work in the renewable space as well. And so that's our background. We do Doomberg basically full time now. Really grateful to our subscribers and grateful for Substack for creating a platform where people like us could achieve such personal sovereignty in very short order.
That's awesome. I want to dive into the energy crisis in Europe. You've been talking about that a lot these days. People are asking you about it all the time in interviews. So I wanted to touch on maybe of all the moving pieces we're seeing in this geopolitical chess game, whatever you want to call it. Is there anything that you see that most people aren't paying attention to that maybe they should be when considering the overall picture?
I'd say that would have been more true a year ago when we started writing about it than today, where everybody in the world is looking at it. As you can imagine, the situation has gotten an enormous amount of attention, which is not surprising, I suppose. I would say the situation has abated quite a bit in the past couple of weeks, thanks largely to a substantial warming spell over Western Europe, which is really fantastic news and has driven the price of natural gas down substantially from its highs, although it's still very elevated compared to historical, and the price of electricity in Germany, for example, which is kind of a benchmark that people quote on Twitter, is also well off its highs, thankfully. And you know, we're the first to say that we hope the winter stays as mild because you know, what we're seeing right now, of course, is, as I'm sure you know, natural gas is very, very volatile because you know, there's only so much storage capacity that can be used in Europe, and because of the warm weather and cutbacks in industry and savings on the part of households because of elevated prices, you suddenly sort of found yourself with a bit of a glut of LNG carriers sitting outside, say, Spain and so on, and that drives prices down. So it's kind of not much to say other than let's hope they get through the winter and then see how they begin to store for next winter, because don't forget, most of the gas and storage today came through pipelines that don't exist anymore, thanks to the sabotage of the Nord Stream pipelines. And so, knock on wood, it looks pretty good for Europe for the winter of 2022, 2023. I suspect there'll be one more hard winter, and then the end state, which is something we've tweeted about and written about, but we don't see too many other people talking about, is sort of 5 years from now, what does the natural gas market look like? And we think it's going to be largely a global market with sort of price ranges sort of capped as a function of shipping costs. And so that's going to make for a really fascinating post-crisis world as well.
You've mentioned this is not just a European problem and that Europe is exporting inflationary pressures to countries that can least afford to absorb them. Could you expand on that and explain how that's occurring?
Yeah, so at the peak of the crisis, when European natural gas touched $100 per million BTU intraday, which is just a crazy price. It's almost $600 a barrel of oil energy equivalent. That was dragging up the worldwide price of all commodities. And so we wrote in a piece recently that amazingly, corrected for energy, coal, and this is still true today, coal is selling for more than a barrel of oil, even though the only thing you can do with coal is burn it to make electricity, whereas oil has so many other uses. The price of oil is below the price of coal on an energy base. Now, if you think about all of the emerging economies for whom access to cheap thermal coal was their primary source of running their economies, well, that access is now gone, and certainly the cheap part of it is now gone, even if they could get it. And so you're seeing substantial hyperinflationary events in very large countries. We've profiled a couple of them. For example, Pakistan literally had a request for proposal out that received no offers for several years of not even a single LNG carrier, and so they're left to find ways to make do without. Bangladesh, same story. Luckily for Bangladesh, they had a long-term supply contract with Qatar, but it still puts people in a not only supply shortage, but just the price of what's the clearing price of energy, right? And Europe is a wealthy society, and because of their own bundling of their energy strategy, they're scrambling to buy every incremental joule of energy they can find. And therefore, they are the ones setting the market clearing price, and then the rest of the world have to deal with the inflationary shocks that those price spikes have caused. And then second and third order effects, which are a bit lagged, which is the negative impact on industry and the negative impact on economic growth. If more and more of your money needs to be set aside just to heat your home or to heat your business, and then when we see businesses like in the UK and Western Europe begin to close, and then those people are now unemployed. And so this is sort of a rolling ball of inflation, exacerbated by the energy crisis. And that's a match that was kind of thrown on a hyper financialized pile of money that the world had already printed in response to COVID. So it's kind of a perfect storm. And we're seeing that play out now.
So there's a lot of reckless and misguided government policies driving the energy crisis, particularly among European Union member countries. Some people are speculating that the EU might dissolve over the course of the next decade. How likely do you think that is? And if the EU were to come to an end, I know it's not an easy black and white question, but in your view, would that be a good or a bad thing, or somewhere in the middle?
We've never we always assumed that the situation would lead to protectionist policies, which is something we've written about, and we're starting to see. And we've also warned that the situation might trigger a substantial rightward tilt in European politics. And I think the election in Italy, for example, and the inability of the UK to keep a government for more than 2 weeks tells you that there's significant political stress in the system. As my friend Marco Pakis likes to say, there's a much stronger desire to see the European project succeed from within than outsiders can appreciate. And as many times as we visited Europe, we've never lived there, and so we defer to his expertise and that of others. We shall see. I mean, everyone's looking at the same signpost, which is the spread between German and Italian 10-year bonds, and this anti-fragmentation policy of the ECB, and what that even means and what it will entail. And everybody's watching the gilt market in the UK and the struggles of the British pound and the euro against the dollar, and the Japanese yen, for example, another connected currency connected via the energy crisis, of course, all three of those regions being net energy importers of significant consequence. So if you push me, I would say that the European Union will persist through this crisis. They've persisted through many crises. What it looks like on the back end, if we're right, is probably more control, more centralized control at the EU level, and less nation state autonomy, assuming the populations put up with that, but we shall see.
So in terms of, I don't want to let you off the hook till I get an opinion from you on if the European Union was to end. Do you see this as a net positive, a net negative? Is it much more complicated than that? Would it be a lot of suffering in the short term, but maybe better in the long term? How would you view that situation?
It's I would say in the long run, since the EU is a bloated bureaucracy with minimal talent and ability to think strategically, otherwise they wouldn't be in this situation. I would say that a renationalization of the European countries and sort of a fragmentation of policies that are optimized for each individual country would probably net beneficial in the long term, although modeling the friction of that transition would be difficult. And so it's kind of like a singularity. It's hard to know what's on the other side of it because the laws of physics break down. That transition would be a pretty challenging one. And I don't expect that the European Enlightenment would go away without much of a fight. And so, the path from here to there is probably a little too dangerous to contemplate. But I think if you get through it, I think Italy should set a policy that optimizes for Italy, and Greece should set a policy that optimizes for Greece. And there's certainly benefits of collaborating. Like I would say the single currency is useful, I suppose, but at the same time, dictating the fiscal policies of countries that have radically different economic characteristics was never a wise decision in our view. And the entire sort of EU crisis is nothing more than a rolling series of efforts to paper that over, quite literally.
I will be co-hosting the Kinvestor Battery Metals and Mining Conference on November 22nd at 9 a.m. Pacific Time alongside Gwen Preston of The Resource Maven. We've got some great companies who are going to be presenting and answering your questions live, including ISO Energy, Summa Silver, Sigma Lithium, and more. So click the link in the description below this video to reserve your spot now, and I'll see you guys November 22nd at the Kinvestor Battery Metals and Mining Conference. That's a great answer. Love it. So I want to pivot now to opportunities that might be presenting themselves due to the lack of energy. And, you never want to talk about profiting and benefiting from misery. A lot of people get the wrong idea about that. The truth is it requires investment in these commodities to get out of where we're at. So I wanted to start off with oil and gas. Do you think there's plenty of demand left for hydrocarbons? I mean, obviously there is in the short term. Some people talk about peak oil demand won't be until even the 2040s or the 2050s. What's your view on the oil and gas markets?
I think if we could fast forward 100 years, the human race will still be using, they'll be using more oil than they are today. That's my firm belief. It's just a fact. I mean, either that or there will be a lot less of us. I would say on a per capita basis, the use of fossil fuels will grow almost indefinitely. And I know there's lots of sort of net zero by 2050 and all this sort of happy talk. It doesn't do anybody service to do that. We have so many billions of people just now beginning to scratch their way to what we would consider sort of the bare minimum of middle class. All of those people want a higher standard of living, and who are we to deny them the ability to do so? And so if you just look at India and China, forget about the sort of overarching demographics of some of those countries, which are certainly about to experience some population decline. If you just slice the subset of those societies that we would call emerging middle class, that number has been growing at an epic rate. We're not big believers in peak oil. We think there's plenty of oil underground, and we think that the rate of growth of our consumption of oil is only gated by our ability to invent the technologies needed to extract it, and we're very good at that, much better than sort of the naysayers or proponents of the peak oil theory would like to give credit for. Will there be some supply crises along the way, and will there be some demand destruction along the way? Of course, but on a sort of a decade-long time horizon, there's this sort of this efficiency paradox, right? Like the more able we are to extract useful work from a material, the more likely we are to use more of it. And so, like when the steam engine was invented, to make the mining of coal easier. We didn't mine the exact same amount of coal and rested. We used those steam engines to mine even more coal because energy is life and people want a higher standard of living, and you need primary energy to do that. And so I do believe 100 years from now, we'll be using just as much oil, if not more, in total and per capita than we are today.
So, how about uranium? It seems like the political will is now there to embrace nuclear energy, and a lot of people, including myself, believe we're experiencing a new nuclear renaissance. What are your thoughts there? Do you see this renaissance as real, and how do you see the uranium landscape as we sit here today and ahead in the future?
Yeah, as I'm sure you know, we're huge fans of nuclear energy, and in fact, the only scenario where you can imagine putting a significant dent in our fossil fuel demand would be if we had a radical deployment of nuclear power all around the world, because we could do almost everything with nuclear. There's obviously a few things that we would still need significant amount of fossil fuels for, like as inputs into chemicals, and also I do think that heavy duty diesel and our trucking industry will be reliant on diesel for a long time, and so yeah, there are things that nuclear can't do, but not much. And in fact, you could design much of a hydrogen economy around nuclear power with electrolyzers, which is what we proposed in one of our most recent pieces, as sort of a way to make fun of the silly Canada-Germany hydrogen alliance, which is just sort of nonsense. So the piece was called Chicken's Razor, for anybody who wants to go look it up over on our Substack. But yeah, huge fans of nuclear, big fans of the work that Dr. Chris Kiefer is doing over at Canadians for Nuclear Energy. And we are seeing lots of momentum in the nuclear space. We wrote a piece last month, I believe, called Green Shoots of Logic, where we highlighted how even the most progressive environmental politicians are beginning to reverse course, recognizing the undeniable fact that you cannot begin to decarbonize the economy unless you have a substantial increase in the amount of nuclear power you're using without destroying people's standards of living. And people don't like to have their standards of living destroyed. And so whether it be Diablo Canyon in California, or Palisades in Michigan, or the Pickering plant in Canada, or even Germany's recent decision to extend the life of its 3 remaining nuclear power plants, or Japan's recommitment to turning on its power plants in the face of its own LNG gas crisis made worse by Europe, or with China with 50 nuclear power plants under construction and maybe another 100 on the design board, and India going down its path. Poland just about to build its first nuclear reactor here. Once we could get through this Russia-Ukraine conflict and the energy crisis passes, I do think that this one good thing that could come out of this crisis is the reconnection with physics that is needed amongst our leaders. And we're pretty hopeful that that's going to be long-term bullish for nuclear power in general, and of course, uranium in particular.
So coal is probably the most hated of all natural resources, and yet it appears that coal use globally is going strong and maybe rising here up ahead. How willing do you think European leaders are? I mean, we've already seen Germany burning a lot of coal, but across the board, how willing do you think they are to use coal when push really comes to shove and they need to keep their citizens warm? And do you think there's still investment opportunity left in the sector?
So we don't have to guess. We have a specific observation of what happened when they ran out of energy, and they turned back to coal as quickly as they could. And you are correct. 2022, for all of the global efforts to decarbonize, 2022 will be a record year of coal consumption globally. And by the way, it didn't have to be that way, of course. In our sort of strategy for sensible strategy on energy has sort of 4 pillars, which is, obviously replace coal with natural gas, cleaner burning. There's lots of it. Obviously, re-embark with nuclear power. And in fact, we also propose that we can make solar panels in the US in the shale patch. And then obviously our own proposal on battery materials would be that we should emphasize plug-in hybrids over BEVs because there's just not enough battery materials to go around. That's a pretty sensible strategy in our view. And unfortunately, because, and we've tried to warn our friends in the environmental space for the better part of years, the path function matters. And because we chose a very particularly poor path, we ended up with having no other option but to burn coal. And in Germany in particular, the dirtiest types of coal possible are being burned in massive quantities, which makes the sort of perverted hatred of nuclear power on the part of the German Greens all the more gross. They, in their eyes, only in the eyes of convoluted environmental extremists, could carbon-free nuclear power that pre-exists be somehow worse than returning back to and firing up mothballed coal plants to get through the winter. You could make it up if you tried. And then, of course, there's the burning of the wood all over Europe, which is somehow considered carbon-free as well, which we've written about. The clear-cutting force in the U.S. Southeast in order to land pellets of wood in the UK, and somehow this is sort of the immaculate combustion. This is the carbon doesn't count because we've just decided it's green. It's you just can't make it up. It's crazy. So yes, per your question about investment opportunities in the space, we don't do investing advice, but broadly speaking, our view is that especially in some of these dirty industries, a lot of the opportunities are going to come in the private market because public companies, and allocators like BlackRock and so on, it just can't. It's not investable, and so. But if you have the funds, and you could do it privately, there's obviously people that are mining coal and selling it right now are obviously printing a lot of cash, and you pay back your investors via dividends and so on, and recapitalizations, and so we think that there's plenty of opportunity in the private sector of the market. The publicly traded coal companies are still trading at extraordinarily depressed multiples, and it's not like the price is going to get much better from here. So if the price of coal gets cut in half, it will still be 4 or 5 times historical average. But what's the catalyst to drive these stocks higher? Nobody can own them, so nobody owns them.
Yeah, it's funny. Rick Rule said the exact same thing. I just interviewed him recently, so definitely good to get that information. I want to touch on renewables here because in the circles I run in, they're just not looked on very favorably. And I have to admit, I have a bias against them, both due to just the logistical fact that they're intermittent and largely dependent on geography. And then perhaps from a philosophical standpoint, some of the worst members of the political class are claiming they're the answer to all our energy problems. But are we throwing the baby out with the bathwater here? Can renewable energy be an effective solution? And is there room for renewables in a truly energy efficient society?
So if we take a step back, let's partition renewables into 2 categories, wind and solar. And I would say there's a substantial difference between the two. We're not big fans of wind. We think it uses an enormous amount of resources. The energy payback period, not the financial payback period, but the energy payback period is very dubious. There's all kinds of environmental issues with wind. Solar is a different story for us. And this kind of annoys some of our friends who think similarly to us in other ways. The vast amount of energy that bombards the earth every day from the sun is makes it always and forever worth researching, investing, studying, optimizing, unique ways to try to harvest it. That we capture a fraction of the sun's energy. Just a small fraction of the sun's energy is used to do all the photosynthesis that we see on Earth. The sun runs the planet. The sun is, wind is just a derivative of solar energy. Oil and gas are apparently just stored solar energy from centuries ago. Although how the oil got there is an interesting conversation we could perhaps have on a different recording. But by and large, the sun is responsible for everything that we see around us, and the prize of being able to crack that in a way that circumvents some of the existing challenges, which are real and that we acknowledge. There's just something very seductive about capturing a tiny amount of the energy that is already here and putting it to use. And so we've always had a soft spot in our heart for solar. We've worked in the industry for several years, which is why we know the true story of how China came to dominate it, and why we're able to write some of the pieces that we've written. But by and large, I would say that solar gets a nod from us for reasons that go beyond the practical. Wind is it's very difficult for us to find a good use case for wind.
So for solar, is there just more research and work that needs to be done before it's feasible? Because, there's a lot of these solar panel farms, or whatever you want to call them, large swaths of land where they're putting solar panels on them. Is that a bad practice logistically? And do you think that the industry is not quite there yet? We need more years of research to get it to a point where it's efficient, or is there some solar that's feasible to use effectively today?
The challenge with the space, of course, is whenever you have big government grants, you have a lot of grift and waste. And And so the industry has been stained by that. But also, frankly, a lot of people lost a lot of money because the Chinese decided to take the industry over. 90+% of the current photovoltaic supply chain resides in China. And we've written about this extensively, but basically they leverage slave labor and dirty coal to make solar panels on the cheap and put everybody else out of business. And so one of the planks of our energy strategy is we should take back the polysilicon supply chain, and much cleaner and more efficient to do it with American workers in the shale patch using natural gas than it is to burn thermal coal in labor questionable parts of China, and the U.S. is already putting some pressure on those imports. And so there are certainly challenges with it. Recyclability is a big issue, but at the same time, and by the way, if people think of solar, they just think of photovoltaics, but of course, this is all kinds of concentrated solar power and extracting heat from the sun in order to produce electricity as well, which again, we have some experience with from decades ago. A lot of false starts and wasted government money in there, and you get one Solyndra and the whole brand gets blown up, and so it's a challenge. The biggest challenge, of course, is grid management and the intermittency that comes with it, and the fact that you need more natural gas peaking plants and so on to help balance the grid. Storage is a big challenge, and the use of lithium-ion batteries for grid storage is about the dumbest thing we could imagine doing, but people still seem to think that this is the solution. So there's lots of challenges with the space, but I just think it's worth hammering away at it. The potential is just enormous, and so maybe we're just technical softies, but we can believe that fossil fuel demand won't go down very much, and that you should still be researching solar and advanced nuclear, and you never know. Like, research always surprises people, and what seems sort of not practical today could suddenly become possible because of an invention in a different field that you have sort of no idea about until you connect the dots. And so that's our answer there.
I want to get your thoughts now on the monetary metals, because I know you view physical gold in particular as a form of savings as opposed to an investment, which is very in line with my own philosophy. I don't check the price very often. I don't really care. I hope I never have to sell it. So can you lay out your view on gold as a form of savings, as a means to protect purchasing power? And as a follow-up, what do you think of silver? Do you prefer gold over silver? Do you think both of them have a role to play?
Yeah, so as we've described our financial strategy in our personal lives, we earn money in fiat because that's the world we live in, and we have to buy food and pay for gasoline and electricity and so on. And we save by buying real assets, and gold and silver would be subcategories of real assets. And then we invest privately, where we can leverage our skills and our network to try to create what we would sort of call individual alpha, where you can actually help a business do better and be part of the equity stack that enjoys outsized returns. We've just had more success in the private sector than we had speculating in individual stocks or options. So to your question, yeah, gold is a fantastic real asset. We obviously buy land, and we have a land business as well as one of our sort of side projects, and we view let's just take a step back. If I had 20 gold eagles today, 1 ounce coins, that could buy you a pretty decent vehicle. And I think in 20 years, 20 gold eagles will still buy you a decent vehicle. That's just the way we view it. And so, when we have excess earnings that we don't want to leave, frittering away to the forces of inflation, we buy some physical gold. We also, of course, might hold our financial assets in something like Sprott Physical Gold Trust, because we do trust that there's actually physical gold backing it, unlike GLD. But by and large, when we buy a parcel of land that we intend to keep and hand down to our children, let's say, when our time on this planet is up, we're not looking at the day-to-day price of real estate in the area and marking that land to market. We're saying, hey, we have X ounces of gold and Y acres of land, and that is a floor to our net worth. Land will always be worth something. Gold will always be worth something substantial in our view. And then silver is a bit of a different issue. We do have a fair amount of silver, but mostly because it's sort of as a prepper, it's nice to have small denominations of precious metals that you could use for barter in the sort of ultimate grid down scenario. You don't want to be handing out gold coins, even 1/10 of an ounce. That's an awful big bill to be breaking. And so we like silver. Silver, of course, is a hybrid. It's not just a precious metal, it's an industrial metal. And ironically, number one industrial use for it, as I'm sure you know, is in solar. And so your silver fans that watch your show should be happy with our stance on solar, because if solar went away, the demand for silver would collapse, and along with it with the price. And so, but gold is more of a precious metal these days than silver. You know, on the gradient from copper to gold, silver's somewhere in between. Not to like annoy the silver bugs here, but I'd say I'd much rather own gold for the long term than silver, because it has this industrial use, which sort of makes it a little more volatile and less like money.
I just want to touch a little bit more on that point you made about silver, because it's the first time I've heard anybody say it. You believe that if the demand for solar went away, that the silver market would suffer substantially. Is that correct?
Yeah, well, I mean, several tens of percent of the silver that's mined every year is consumed in industrial processes, and the number one industrial process for which silver is used is in the construction of solar panels. And silver, the demand for silver has benefited from the growth of the solar industry. That's pretty undeniable. And so presumably, if solar was made illegal tomorrow, there'd be sort of a constipation in demand for silver, which would put negative pressure on the price, all things being equal, of course. And so, yeah, I do think if you're a fan of silver, you got to be a fan of solar.
Well, thank you so much for joining us today. For those who may be interested in hearing more from you, you've touched on it a little bit already, but maybe you could dive a little bit deeper into your Substack and anywhere else online you'd like to direct people.
Yeah, thanks, Jesse. Appreciated the conversation and real honor to be on your show. We are at doomberg.substack.com. And last month we had the thrill of learning that we are now the number one financial Substack in the world, which is kind of stunning and humbling and thrilling and amazing all at the same time. And we are 100% subscriber supported. We do not take ads or accept sponsorships, and there's nothing wrong with those models. It's just given how provocative we like to write, we thought it would be important for us to have complete editorial control over the things that we do write. And so 100% subscriber supported. Every subscriber is precious. And we wake up every day and do our best to delight our subscribers, and are always thinking about how we can improve. And the only other place you can find us is on Twitter, at Doomberg T. T is in Twitter. You can find us over there. As we're talking, we're about to cross 200,000 followers on Twitter, which is pretty amazing. So it's been a great run. Anybody listening that wants to subscribe, we certainly appreciate your business and would work hard to earn it.
Great. I'll put links in the description below to both the Substack and Twitter so people can find those easily. Doomberg, it's been an honor, and look forward to having you on again at some point in the future to continue the conversation.
Anytime, Jesse. It was great. Thanks.
This is the Uranium Element Cube from Engineered Labs. They're a sponsor of the program now, and the reason why is because I genuinely love this product. I've always wanted to get real uranium in my hands, and that's what this is. That crystal in there is 50% uranium by weight. The acrylic shield surrounding it reduces the radiation emitted to a very low level that is completely safe. Engineered Labs also ships worldwide, which is great. The products are made in the USA, and if you use my discount code COMMODITIES at checkout, you'll receive a 10% discount on your order, and you will be supporting this program. The Uranium Element Cube, link is in the description below. And now, back to the program. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.